This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Raising funding for your startup is a challenge. How much should you raise? Where do you find investors? And how do you pitch them? In this segment, How to Raise Funding for Your Startup, we'll answer those questions and more. Here are live outtakes with startup founders on how to raise funding. I hope you enjoy this episode. For those launching a business in the U.S. that is already up and running internationally, here's a conversation that you may find interesting for how you set up in the U.S. and find funding for that initial startup.
So typically, I think that is where I would like to leave it. For a food manufacturing setup, the scale doesn't matter. We have various junctures where we will have the hardware, and we have various junctures where we will have the sort of app and the workflow management. So it's mostly automation of workflow and creating traceability based manufacturing operations. So that's where I'd like to end it and hear more from you.
Okay, great. Do you guys have revenue yet or no?
We are at 100K ARR, and that's an India revenue. We are getting our first customers in US during this visit.
What kind of customers are they? Are they restaurants? Are they food companies? Who are they?
So the present customers are, the top brand on the left is a cake brand, which does some 25 million of revenue. The next is a fresh fruits and vegetables trader. The third is a Indian QSR brand, which does Chinese cuisine. The fourth is world's largest cloud kitchen operator, Rebel Foods. So they have the largest network of cloud kitchens. And again, Pluck is a fresh fruits and vegetable trader. And what is important is in the pipeline, we have an international group where we are closing the contract with them for 4 deployments, possibly a roadmap for an international rollout. It's an international caterer. And then you have Wingstop, which is a franchisee-based chicken chain. And then you have specific deep dive cuisine restaurants. So you see, I think different segments are there, but fundamentally the underlying element is that all of them process fresh food and sell fresh food. That's where we are.
So how much funding are you raising at this point?
So we are at, as I said, $100K ARR. The green is the revenue journey. So we have been sort of doing a 3x growth for last 2 years. And we are raising 3 million seed round to get to 2 million ARR.
Okay. So you're raising $3 million and you've got 300K from angels so far. Is that right?
Yes.
Okay. And so we're raising 2.7 million is left in this case. Okay. So, I mean, we could go to angel groups and put this out there to them. Is this an India company or a US company? What's the legal structure?
Right now, we are in Indian company, but I think we are on a roadmap to do a Delaware incorporation. We are, and that's where we would like to understand. So I think I would prefer first a seed or a deep tech VC round rather than an angel round, because I think we need that network of both on the financial side and on the customer side to make the doors open as we execute.
So is this a Delaware C corporation or an India C corporation?
No, as I said, right now it's an Indian private limited organization, but the plan is in the seed round that we raise in US, it will be a Delaware C corp.
Okay, you'll need to put it out there that you're going to move to a Delaware C before you get US money. U.S. investors will want that.
That's
and
quite
it may be best to take your
yeah.
subsidiary and make it into a Delaware C, just so from the get-go, this subsidiary you can invest in is a Delaware C. So it's one thing to consider. Have you talked to angel groups? So you got 300K so far. What kind of feedback did you get so far from them?
All that angel was before when we started even building the product. That was in 2020. So,
okay. So we haven't raised money recently then. Okay.
Yeah. So it's not, I think, not at the current stage. And that's where we want to go beyond angels and make this as an institutional round. I think very, very welcoming in having HNIs or family offices. But I think what we right now need is an institutional round. That is what we are aiming for.
So if you want to go the institutional round, the Sodexo you had up there is probably the best chance. They have a venture capital arm. Have you talked to them yet? And what did they say?
I think we are first focusing on closing the business right now. And then I think based on that, naturally, they only have said that our intention is to do strategic investment, but they want to walk with us on our implementation before they do that.
How long will it take to implement it?
6 months at least.
6 months. Okay. But there's no dialogue so far with anybody in the VC arm of Sodexo?
No, we have not also initiated, and they also have clearly called out that, yeah, the intention is to do investments. That's where we work with startups. But yeah, we want to first see the technology in action and creating an impact on our operations.
So you have other customers here already. Are any of those potential investor candidates?
Yes. Those are there, and we already have some offers from the Indian consumers. My goal right now is US deep tech or a food tech institutional VC coming on board, because that will help us get on the trajectory of the finding the right customers and the right investors in the subsequent rounds. So we really need somebody who has done this before, either in deep tech or food tech on our cap table, not just money. We really are not looking for just money, but somebody who has built a tech hardware plus software business and has done supported enterprise startups in the past.
Right. Well, in this current market, you'll find it very hard to raise money from a VC for anything unless you have $1 million of annual recurring revenue.
Mm-hmm.
And we're probably a year away from that or more.
Mm-hmm.
We're on our way, but we're not there yet. I think that VC is going to be very, very hard to close. The thing I would look for is what I call anchor clients who are paying custom prices for an implementation of your solution. So those companies that were buying into it up front, we're looking for more of those. And instead of selling them the standard version with the standard price, I'm going to reach out and ask for them to give me what exactly do they want, and we're going to build a custom version of our solution for them, maintaining the standard architecture and so forth, and start looking, instead of for 80K, I want 800K up front to go build this out for them and make a standard solution. And then if you get 2 or 3 of those, you'll have your $1 million. You'll have the money you need to build out the platform, and after the first 3, you can go back to just doing standard customers. So I would look for custom contracts along the way, because that's non-dilutive funding. They're getting something that's a little bit different or unique, and you're doing a little bit of extra work for them. But at the same time, you're building out your current platform, making sure you have all the features. You have some, but you don't have all of them. But that's the angle I would take, because you're going to find VCs very hard to close. They just don't have the limited partners putting in money yet. Now the market's going in the right direction, and by the end of the year, I think it will open back up. But if I were you, in the next 4 months, I would pick 1, 2, 3 contract projects, and then come back at when you have $1 million of annual recurring revenue. Go talk to the VCs at that point, because it's going to be very hard. Angels can help a little bit along the way, but at the same time, I find anchor clients are going to be even better, because you're going to learn more about the market. You're going to build out your platform. You're going to get happy customers. You're going to get a lot of great things out of it. Do you have any thoughts of who might be your first 3 targets for that?
Yeah, I think in India, we have one customer who is already investing in us. Almost $200K. That's the cake company that we are talking about. Then I think my target would be cracking Sodexo, as you were discussing, and maybe getting some success behind our belt on Wingstop, and then reaching out to the headquarters for I would say, a custom implementation, what you're recommending. That could be one of the strategy. But what are your thoughts about deep tech investments being prioritized, specifically on the AI side, by a lot of these funds? So the sentiment which I feel around is that seed is something that is not getting impacted a lot, and seed on AI is where a lot of LPs are still, I think, very, very open to look at the first round of bets. And maybe I think that's where I'd like to hear your thoughts. Is that something different from what understanding you have, or I'm missing something?
Well, there are AI people will invest in AI companies, but they're looking for very strong implementations of it. Now, there's what's called vertical SaaS, which is you're taking one application and going very deep on it, and then there's horizontal SaaS, which is you're going to do it very broadly. For those considering running a crowdfunding equity campaign, consider the following discussion we recently had with someone considering just that. Beware of these issues and look forward to these steps. Thanks.
They offer that they can promote us to their network and alumni, pretty much give us the credibility, which I think would be interesting for angel investors, but they want us to crowdfund. So for them, they publish the article explaining what we do with the links to the crowdfunding campaign. I'm a little bit hesitant about it, even though I love them. And I think Wharton is a great name and great credential. And anything that helps us, again, stand out, to go from 97% of those female founders into this 3% will help. What do you think about their offer, or how it can be combined with what you do?
So when we talk about crowdfunding, we talk about like Start Engine and WeFunder and equity crowdfunding campaigns. Okay. The key to a successful crowdfunding campaign is you have to have 10,000 contacts in your network that know you to make a successful, meaningful campaign for $500K, $1 million, something like that. It's once you get past your network, you'll spend 15 to 20% of the fundraise on email marketing and social media. Very, very expensive compared to everything else. The startup world is 5%.
So you don't think that Wharton has a value enough to push us into this crowdfunding? Because I'm also very skeptical about.
Well, that's the question. How big is your list? You have 10,000 people that we're going to go to? Oh, you have 50. Okay, that's a different number. So that's what you want to get clarity on, is how big is this list and how many mailings can we make to it? If I can mail to it every 2 weeks with an update, this is interesting. If I get one mailing, this is not interesting. If you have 10,000 people, this is interesting. If you have 5 people, this is not interesting. So you just want to get more specific about what exactly is this network, what kind of engagement or activity can we put through it? Because crowdfunding, if you've ever been on the receiving end of that, you're getting an update almost every week with what's happening in the deal and changes and so forth. And we do the same thing ourselves, but it's for people that opt into it. And so when you do your mailing, you're figuring out, well, who's opting in? Okay, what do we get to do with those who opt in? Those who don't opt in, how many more of these do we get to do? 2, maybe 3 in the campaign is what we normally hear. So you just want to get more clarity around it. But on the surface, it doesn't sound like I doubt they have 10,000 contacts. I doubt they let you do a mailing every week for a 3-month campaign. We do that in our campaign program, but it's with people that we put it out and they said, yeah, I'm interested. Okay, we get to go to you guys. And we're starting with about 100 on our list, but we're not doing crowdfunding. We're doing angels. I will say most people that come to me after the WeFunder Start Engine said, I should have gone to angels first because I should have been working on 50K checks, not $500 credit card clicks. And it was the same amount of time. So that's why you really want to think hard about doing crowdfunding is, do I really have the network? Some consumer brands who've been out there for a while, they have a 10,000 person list. By all means, do that, because you're turning your customers into investors, investors into customers.
We are B2B SaaS, yeah. So my challenge would be to get that article published without the crowdfunding thing, right? Then you would use it if we engage. Then you would say, and by the way, here is the article. Wharton, is really, saying high regards about Sangrof and impact shopping, and kind of like.
Well, a group promising you crowdfunding is really not going to be compelling to investors. A group that put money in, we were an angel group and we put 500K in, that's compelling to investors. So let's just be clear about what investors are interested in. Okay. So proposed crowdfunding campaigns are not interesting. In fact, we coach crowdfunding should come on the back end of it. Up front, you go to angel groups, get some money, get a realistic market valuation. Many people coming out of crowdfunding have a very unrealistic market valuation, and this can actually kill you when you go to accredited investors.
Yeah, I mean, the round that Ideaship stepped in was priced at 7.5 pre-money, and it was before the pilots.
Yeah. How much money did you guys put into it up front? How much have you guys invested into it so far?
We raised so far with our money plus what we raised is a little bit over 500.
500. Okay.
550.
So investors are going to look at how much money has gone into the business since it started, from grants, your funding, outside funding. And from there, they're going to start thinking from here to that valuation, how big is that gap? And so you're probably closer to the $3 million valuation right now. But once you turn on pilots and get revenue coming in, well, then you add that
will be
in. It makes a different game.
Different game.
Okay.
I'll keep you posted. I very much appreciate your advice on vertical SaaS. I will learn more, and you will hear from me.
Great. I'll see an email how we work, and we'll go from there. Thanks so much for taking time. One of the best ways to raise funding from prospective investors is to invite those investors into your investor update meeting. This has the opportunity of giving them a perspective of the entire team, what they're doing, and what other investors are in the deal and what they're saying about it. It's one of the easiest ones to do and one of the best, most effective ways to convert investors. Try inviting people into your investor update. Here's an example. The other one we do is the investor update event. I don't know, do you guys have any meetings with your current investors?
Not meetings, but we send out occasional updates. That'll become more formalized going forward as we're starting to get investors who don't know us as well. So we'll start.
So one of the best events we've ever found, and the easiest one, is you take that email update, you turn it into a 1-hour Zoom event, and you invite your current investors to log on and get the update about what's going on. And so the CEO gives a 10-minute report, and the CTO gives a 10-minute report, and the CSO gives a 10-minute report, and you're getting a view of where the business is and people that are running it. And then the investors in the audience get to ask questions. What about this? What about that? So those are the people that have invested. What we're proposing is that you invite prospective investors to come in and watch and ask questions. And because you're already doing this anyway with your current investors, once a quarter is plenty, you really get the ability to show the whole team in action to the investor, which is pretty awesome, because usually all they see is the CEO. So they don't get the full appreciation of the team in most cases, but this is one way to do that. And I've asked our guys, do you want to sign NDAs? Nobody wants to sign NDA. It's just not worth it. Just come on in, and we know who's looking at this, and we know what we're putting out there, and love to have these prospective investors in there looking and asking. And at the end, you have one of your existing investors, take 2 minutes and talk about, why did you invest? What was your experience? Right. And they stand up and they say, well, I like the team. I like they make smart decisions. I think we're in a great market space or whatever. And what was the information right? So we get the report every quarter. It's always on time and all that stuff. So that really gives people the vision, new investors, that this is the kind of group I want to join. I want to be a part of that group. They're doing it right. And boy, they seem like they got some great things going on there. So those are things to do. We help organize as well. And then the last one is the in-person event. We often find that we get a cluster of investors in one city or the other, and we'll come out and do a 2-3 hour dinner in a nice restaurant. And the social aspect actually draws people out. I thought that was going to be a challenge, but I found it was actually people a little bit tired of all this Zoom work and don't mind getting to a nice restaurant with an in-person thing. And so that's part of our program as well. We do have to charge extra for the room and the food, but beyond that, it's just our standard program. Those who don't yet have revenue from investors to look at, what you can do is try to create revenue by offering discounts to potential customers and doing custom projects and consulting work. This is one of the best ways to learn more about the industry, about the customer needs, as well as show traction to the investor himself. Consider this example. If you go sell the product, and it sounds like you're doing that now with your current partner, you just go find 2 or 3 more of the same and start cutting deals. Those who give you money now or start paying you a contract fee for doing this work, they get discounts in the future, like next 5 years or whatever off this thing. So by giving future discounts, you can sometimes get funding from partners who want to see this in their product line. And I doubt there's exclusivity you've given to the first one. We don't typically give exclusivity, but we do give a version of the license and some agreement for discounts going down the way. Have you tried that approach with the companies out there?
No, I haven't tried that approach yet.
So one of the things we were teaching at the Feynman was you want to go out and find anchor clients And these are people that will come in early and they want either something custom or they want something that's not available on the market. And for the low price of 100K, they get to have that. And then what you have to do in return is give them either a custom solution or a discounted version of a standard product in the future. One of the two is usually what they'll put the money on the table for. I give you 100K today, but I get 50% off all future tests, whatever the current price is, I get 50% off of that. And by selling it, you basically get revenue from them. And then if they're going to put the money either goes to building the test, and it's kind of more like instead of an investment, they're actually just getting the discount. Or if they do want to make an investment, then they get some percent ownership stake of the company instead of the discount. So if they don't want to get the discount, they want more, well, then you can get an ownership stake. So one of those two usually gets people going. And it just depends upon where their strategy plans to take them. So I think the answer here is to go after some anchor clients and get a few more signed up. And my goal would be get 3. You have 1 so far, get 2 more. And if they've negotiated agreement to they've given you money for that, it's like a prepayment, but that's revenue. You now go back to those angel groups and say, we now have 200K in the bank for our service, and we're currently working to roll that out to them and so forth. They will want to know that it works, but you have market validation. Somebody will pay for it, which helps a lot. In our program, what we do is help you raise funding, but we charge a retainer of $3K a month for 3 months to go out to the market and do a lot of this. And that may or may not be in the budget right now. So that's one thing to do, is get a few more anchor clients and use their revenue and their support, big logos up there on the screen and what they plan to do with it and how it's going to be a key part of their future product line and so forth. You're designed in, so to speak. And that usually gets some angel groups going, especially the life science ones. So that's one angle. The other angle is to go after physicians. Physicians probably understand the value of this. Have you talked to any physicians about being investors in the deal?
No, I'm not. I'm not really plugged into the physician world, so I'm trying to reach out to some contacts and make some inroads there. There was one person who offered to hook me with a bunch of physicians who he said were very excited out in New York, but it sounded a little too sketchy. It was like, you go there and you wine and dine all these people for $10,000 over a 3-day period, and then you're going to get a bunch of investments afterwards.
So yeah, I'd probably start a little closer to home. If you're there near the Mayo Clinic, big names like Mayo, Cleveland Clinic, Texas Medical, these are big names that really land with the investor. So if you had somebody from the Mayo Clinic trying this out, you find, through your network, find a physician there, show it to them. And then what you can do is sign up a physician with advisory shares. We'll give you some extra shares, usually about 25K worth is what most people do for light work. And we only need light work at this point. Heavy work is 100K, but that's when you go up against the FDA or the like. And so with 25K, it's vested over a 12-month period. You get some portion every month, and they have to do several things. One, answer questions about the product, because you'll have to make some decisions along the way, and it's good to have their feedback on it. And number 2, they need to introduce you to three physicians in their network every month. And they don't have to make sure it turns into an investment, but if they're in the deal, so to speak, and they're getting physician advisory shares, they can say, I'm an investor. Then you can leverage that to find more physicians to come into it. So it's more of a networking effort. And physicians know physicians. And so if one physician says it's good, then others start to follow along. So I might think along the lines of finding 1 or 2 physicians that like it, they fundamentally believe it's the right thing, and then give them some advisory shares to go and help you get in touch with other physicians. So it's the lighter version of the New York model. New York model is the heavier version of that. I'm not saying it's good or bad. I don't know them, but I always like to start with the light version, which is your network, and check around to see what physicians might be interested in this. Have them sign, but make it worth their time. If you want them to really do work, you have to compensate them, and advisory shares can be a way of doing that. For physicians, scientists, and other technical people who want to start their own business, it's best to hire a CEO to run the business and raise funding and sell the product while you work on the actual product itself. Here's an example to consider.
I watched what happened last meeting with a lot of attention, and here's my view on my position within your group. I'm undertaking on a huge project. Essentially, I'm trying to revamp CPR. Okay. I am a solo person in this endeavor. There's no way to describe it. Essentially, I'm trying to rewrite the Bible.
Okay.
I do have some support among the academic colleagues, but as a physician, I don't have a lot of weight to say, hey, I know what I am doing, although I do think I know what I am doing, but my credentialing doesn't support it. I've spent 25 years working in critical care, so I know physiology quite well, and I know the limitations of current CPR process. Now, it's a big undertaking. Huge companies, Zoll, including, they invested a lot of money into CPR equipment, and this is what I'm trying to do, but a piece of equipment that would work very differently from what is available right now.
Mm-hmm.
It takes a lot of money to develop it, and I already invested probably 150,000 of my own funds, have 2 patents, have 1 product design, other product is halfway through. Unfortunately, most expensive part is the second half. And I'm in a pre-stage. In theory, and I have plenty of bibliographic evidence, scientific evidence to support that I'm on the right track. In theory, it works. In practice, I don't know. I need to conduct animal studies. And to finish I need to apply for more patents before I conduct animal studies. Otherwise, my other ideas will be up for a grab. So I need probably close to 500,000 in pre-seed stage.
Mm-hmm.
I'm solo. Yes, maybe somebody will write a nice letter, scientific advisory board members. But right now I'm solo. And I don't have a background to support that I know what I'm doing. And in addition to that, I really don't want to be a business person.
Mm-hmm.
I am not a CEO, let's put it this way. I don't like being led, but at the same time, I don't like giving orders and tell, do you do this, you do that, unless it comes to taking care of the patient. I mean, I write orders for the nurses. That's a little different. I get too excited sometimes when it comes to, doing things, and I may overlook something important related to money. So this is where I am. Selling a product on your platform is more of selling yourself than a product. You have to appeal to investors personally, and investors have to have a faith in you, not necessarily in the product. And I don't know if I can do that. But
right.
And here's a question: what do I do? Yes, I can come up with what? It's $9,000 for 3 months.
Mm-hmm.
I'll come up with that, but I'm afraid that it's going to be futile.
Well, we need to get the deal ready first, and one of the things people will look at is the team. A solo founder that does no CEO experience is not going to raise money.
No.
You would need to build a bigger team and recruit somebody to be the CEO, and you be the founder, majority shareholder, but the CTO or the CSO that would, drive the product development, and the CEO goes out and raises the funding and sells the product is what they do. So I would look to find somebody that can help you with that. Have you tried that?
I haven't.
I would think about, not trying to pretend to be a CEO if you have no interest in doing that, have no skills doing that. You're right, this will not go. I believe that every business, no matter what the stage, should have 2 founders, one who is selling it and one who is building it. Obviously, you're building it. And so we need to go find the other guy that will come in and help sell it. This may not be a full-time job. It may not be a compensated job with dollars. It may be more shares in a company that we would compensate them, but we would need to build a bigger team for sure. Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.